Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. About on TradingView chats everywhere. Like I kept watching
You're a
the
legend
social
now.
hits.
You're a
Apparently,
legend.
Hide your sidebar panel.
That's really good. You guys, I mean, that was the idea. Exactly, what you guys did. So you guys are definitely succeeding. The idea
let me know
was
when you're ready to.
is to be able to get retail to act as a major force.
Yeah. Okay, Occam, go ahead and whenever you're ready to go, we can talk over this as it goes. But go ahead and take us through your explanation of what you saw here.
Okay. Well, first of all, let's identify what we're looking at. We're looking at the 1 hour chart on Mullen. We're going to start a playback at IPO back on November 4th. You have a hourly, weekly volume heat map down here, which is going to coordinate with days of the week, hours of the day. So we're going to watch these values as they change during this playback. We're going to start with a real fast speed. So we're starting from, excuse me, I have airplanes flying over my head if you can hear that. We're going to start from the beginning, IPO. We're just going to take note of its consistency and regularity.
And what we're looking at here is the percentage of volume per time frame.
Yes, correct. You're looking at an average volume for this hour compared to the weekly average volume.
So roughly 9.5% of all the volume traded in Mullen is happening at 8 in the morning Central Time, Thursday.
Yes, correct.
Wow.
Yeah. Just consistently throughout.
Now,
this is a 3-month time frame, yeah? This is across 3 months.
Every Thursday?
yes, we started. Yeah. Here, I'm
Okay,
going to
go ahead and slow it down here.
Okay, we're going to pause it. We're going to slow it. So I'm going to keep my cursor so you know what day we're on down here at the very bottom, February 17th.
And what we're calling up, what we're pointing out here, these vertical lines, is when Hell's Trading Floor called out Mullen stock.
Here, let me blow this up because we're getting to the important part.
Yeah. So before you unpause it, Occam, Hell's Trading Floor called this out. Specifically, Lucky as Sevens brought it to my attention the night of February the 21st after trading hours. And I looked at it the very next morning and was like, this is when we saw that 20% of the volume traded in the stock in the last trading week was short exempt. Mm-hmm. Now, and we immediately took a position because we saw how covering was going to have to take place to cover outstanding failures to deliver within 6 trading days.
Mm-hmm.
All right, so go ahead, Occam.
Okay, so just before we start, we are currently at February 22nd. Still notice the consistency.
Mm-hmm.
Yeah.
But there's a little bit of interest happening on Monday.
Mm-hmm. Now we see big changes. Now this is where retail steps in, right here.
Yeah, Monday.
Yeah, first thing in the morning. This is immediately when day traders came in and then got out at the end of the day.
Mm-hmm.
You saw those big volume spikes at 7 in the morning and out at 4 o'clock.
Mm-hmm. And then we can continue this to present, in which it will slightly change its values just because there's been so much volume and retail interest. But the big change, which needs to be noted, and I'll let this finish real quick. We'll be back here, and we can replay that one more time. We'll slow it down even a little bit more.
When you replay it, can you keep your cursor for the date?
Yes, I'm sorry.
So this is pre-market.
And then here's your change right here, 28th.
Right there. First thing Monday.
And then your follow through, your sell off, your values change dramatically after hours, Monday. Follow through Tuesday, first hour of trading.
Big sell-off, big profit taking.
I can't see that. How can you tell it's selling off if it's red? What's the indicator?
Just
We're-
big red, just big down red candles and a massive
Oh,
volume
okay,
spike.
okay.
Yeah, this is not telling us anything about price. This is only
That's what I'm
referring to
looking at.
volume.
How can you tell the difference? I couldn't tell the difference. But
Yeah, we're just this is where we're getting our price from. Obviously, this is just your volume, and really, so just to kind of back up to give context, and I kind of went over this the other day, but we'll back up. So this was written to help avoid areas of getting stop loss hunted, because you don't want to. The point of this indicator is to kind of show you values of the day that you don't want to trade in, because if a whale steps in with big money, the price movement could be dramatic, and they can get in there and they can hit those stop losses and to get the price to whatever they want to try to drive retail or whoever they want out of that position. So that's kind of how I came to this indicator, but I'm using it in a different way just to show this dramatic change in the heat map, because I ran this back on a few other tickers, and regular tickers, blue chip tickers, they do not change like that at all. And I'd be happy to go back and kind of record a few more, but we can like pull up, just give me a ticker that you want to look at that is just a non-manipulated stock in your belief.
Hey,
Just
Home
go.
Depot.
There you go. Home Depot's fine.
Sorry, that means it's due to.
Home Depot works. I mean, it's
Yep, Home Depot works. All right, so let's just back up to make sure we have some kind of change. We'll look at this fast. We'll come back here. We're not going to play this whole thing, but I guarantee you if you play from the beginning of the history of this chart till up to current, it's going to be pretty consistent. Of course, values over large time frames are going to change, but over the short run, see how consistent the hours of trading are.
yeah.
And,
Everybody is trading in like mid-morning and right there an hour before the closing bell.
Sure,
And that's
which-
where most of the volume happens.
which is natural.
That's pretty normal.
Yeah.
This is what normal. Yeah.
This is a normal stock with a normal looking, weekly volume heat map based on the different hours of the day. But then you go look at Mullen, and it paints a much different story.
Yeah.
So
That's a fascinating tool. And that shows very clearly that not only that Mullen was actually being manipulated because of such consistent downtrend and trading on very specific days and times. Just, it's interesting. And then all of a sudden a massive shift to the other side that perfectly coincided with retail's call out that market makers were over leveraged, that shorts had entered into a position that was completely backwards and illogical, and suddenly retail started buying at exactly that time, and then pumpers started talking about it, and all of a sudden, just like the whole volume pattern, the heat map completely changed instantly as soon as retail caught wind of this.
Guess to prove a point, we can go and check AMC and see what AMC did.
Yeah, we could do that. I would love to see what AMC was doing throughout mid-March,
Yeah.
all the way until June.
December.
That'll take a long time to go through, but
yeah.
this,
No.
let's try late March, like say 20th of March,
March.
and go all all the way to June. Yeah, that works.
Although at that point, probably you've already broken the trend because you spiked from $3 to 25.
Yeah, this might have influenced it. Here, let's just back up. We can look at a few windows here. Let's just go here, run this.
Pretty consistent. Not anymore.
So there's your retail that jumps in, completely changes the heat map. Speed it up to, let's go back to March.
Well, you're already there. You may as well let it continue.
Oh, I'm sorry. Yeah. Jeez.
No big deal. No big deal.
Back here.
And then I guess we can wrap up and see if anyone's got any thoughts for the coming week.
Yeah.
You know, Landy and Occam's usually do a lot of homework.
Wait for May 13th is the big date. I want to see what happened May 13th. This is so cool. It's like watching psychology in real time.
Mm-hmm.
Why May 13th? I mean, I know it's in a year from the day it started.
May 13th was the day the stock jumped massively.
Yeah.
It was the signal that told me 3 days later that it was going to make a big move.
Mm.
Big pop right about now. Barely changed the heat map,
Mm-hmm.
but now watch what it does.
Now you're getting some changes in value.
Yeah. All of the trading happened early on in the morning and then a little bit of profit taking at the very end of the day.
Yeah, it'd be a very deep study to go back and look at these low volume times of the day and to see if there was dramatic retracements to try to see if we can identify stop loss hunting in some of those areas. Then you might be able to find a pattern on the low volume hours as well, the days. But that would be a pretty damn deep study.
It would be, but I can just tell you from having traded AMC so much during that time period that Wednesday afternoon, right around noon, was when the sell-offs would consistently occur. The stop loss hunts would come always at noon on any given day, but especially on Wednesday, that was when the biggest selling pressure came because everybody was off for lunch.
Sure. Yep.
What's the tool called, if you don't mind?
Weekly Volume Heatmap, Bob Rivera 990.
Only I could spell weekly. Cool. Thank you.
That is extremely cool. That's fascinating.
Yeah, absolutely. We can
And
It's amazing to watch retail
quantify
moving.
that. To show, like you said, like how a price just squeezes. It'll be phenomenal.
Mm-hmm.
Damn.
Another indicator. It's either you'd add it to your indicator.
And feel free to read this to make sure, double check to make sure I'm looking at this right, because you might have a different interpretation of how the math behind this, but it's not as clear as I want it to be. I do have questions on this indicator and how he's actually calculating the hourly volume, but from what I understand, it's hourly volume as a representation percentage-wise of the weekly average volume from the previous week.
Okay.
So
So it would be like a 5-day moving average of volume.
Right. So it's going to be,
Okay.
so we would have to look at this as a lagging indicator, I
Right.
guess. Yeah. All right.
That was really cool. That's really fascinating.
Yeah, there's
That was
so many awesome tools in TradingView. It just goes on. I just spend hours going through community strips, just trying to understand what these guys are writing. I mean, some people have some awesome little indicators and scripts that they've built in here.
Maybe I'll have to go start learning Pine. All right. Well, thanks, Occam.
Yep. No problem.
If anybody else has not used this tool before, TradingView, Hell's Trading Floor has an affiliate link with TradingView. There's no discount, but if you like this stuff and you like the training that we're offering, teaching people how to use this, you've been using this for like what, 5 years or so?
Yeah, many years. Yeah, TradingView is great. It's great.
Yeah. So if anybody else is interested, this is hands down the best charting software that I have ever used, and I've been using a lot of different charts. I've tried a lot of different brokerages, and I hate them all. After I used TradingView, I realized how badly they all sucked. So, and Occam's has been teaching people in Hell's Trading Floor how to use this effectively and how to interpret the different charting indicators. This can definitely take your technical trading up to the next level, like probably like 10x. But yeah, check out the affiliate link in our video's description when this goes up on YouTube.
Yeah, are you going to make a video on this outcome? You know,
Yeah, that's
I've-
why I asked.
yeah, I've
to
been-
record this.
Yeah, I've been recording it since we started the replay. So I will.
that's great.
I'll get
And
into
also,
it and get with TD and see how we need to get that uploaded.
Yeah, that'd be great if you guys could like show when it would be effective, right? How you usually
Sure.
interpret it.
Yeah, absolutely.
Everything else, that would be a great thing. We appreciate it.
Sure thing. I think that the main utility of this tool is if you're looking at a stock that you're trying to determine if it is being manipulated or if you suspect it's being manipulated, do a history on the chart and find out when there is consistently huge volume on downtrends or uptrends. I mean, it can work for both directions.
Right.
But I can immediately see how you could use that to determine like what's the best time to actually take an entry and avoid that big a whale stepping in and just crushing your position and snatching the shares out of your hands. That is immensely helpful. But it's also useful usable as an indicator for when you see a shift of momentum or an algorithm change, or if retail stepped in on the stock, which is kind of how we used it here just now, looking at Mullen and AMC versus a blue chip stock like Home Depot.
Mm-hmm.
Yeah.
Cool. Well, thanks very much for showing us that, Occam. That was extremely educational. I'm definitely going to take advantage of that going forward.
Yeah, I would.
Yeah.
I'd love to start using this more and get more opinions on how to use it, because I'm seeing it one way, but once you start looking at it on other stocks, you might find a whole new use for it. So that's what I'm excited about.
So are we looking at it predominantly like as a squeeze type play, or just a momentum play, or both, or in your opinion?
Oh, for which ticker are we talking?
For anyone that you.
Oh, using it for squeeze plays. I mean, yeah. I mean, it's got utility, so you could adapt this as some sort of indicator for your squeeze plays, because we have already seen and shown here Mullen and AMC. Mullen, I don't know if we can consider it a squeeze play quite yet. I mean, it has doubled in value.
It's around 150% in a day.
Yeah. So I mean,
Well, also don't forget that if the price rises to $2.50 before the end of this Friday, then every single call, there's more than 40% of the stock, or 40% of the float, I should say, would be in the money.
Yeah.
up till April 14th. So that's definitely huge gamma potential.
Oh yeah.
So
And
if this
that's
thing
what
does
you
start
need.
to challenge that, yeah, and like I was calling out in my last video, $2 is when market makers are going to start having to sweat it, because if the price moves that much, it's very easy for retail to just be like start get ravenous about it and start pushing the stock even higher and higher.
Sure.
And of course, they'll be hungry to flip those options as well. It's kind of an inevitability once a stock becomes that volatile that market makers have totally lost control. Retail is going to start stepping in. They're going to try and gobble up all those options. And if the market makers are fulfilling those automatically, then they're going to keep writing new contracts constantly. And they're already over leveraged as it is. So if it continues going into April, oh man, they're going to be in massive trouble.
Well, you can see the output from SecuRityBot, and this is a sneak peek into the next release, is to see what sort of dates and strikes are targeted by retail.
Okay. I wanted to point this out, the chart that Verde's got. This is a new implemented, this is a options OI heat map, or an open interest heat map. So we've got the highest concentration of calls for Mullen up here right now. And if you want to bring up that gamma ramp chart, Verde, that one would
Yeah,
also be helpful to illustrate kind of what we're looking at. But in the video from earlier in the week, we were pointing out that this chart here that Verde is showing up here on the right, Mullen has a big ramp up to the 250 strike. So that would put just under 40%, or exactly 38.6% of Mullen's float in the money. That would absolutely create a supply crisis for market makers.
Yeah.
Anytime there's a situation where market makers need to acquire shares and cover short positions, and they have a whole bunch of options that they've been writing in order to provide liquidity into the options market, they've now put themselves in an over-leveraged position combined with a over-leveraged net short position, which is even more dangerous for them because there's fewer shares for them to borrow. And what can happen is if the price of the stock rises past $2, then those market makers are now at their risk level for those 250 strike options. And like I'm pretty much well convinced if we see $2 again and we establish support above $2, then they're going to hedge. They're going to hedge their risk. They're going to have to start buying shares. They're going to have to start selling puts for the liquidity, and they're going to have to start buying in the money calls in order to make sure that they have those shares available. But they've further shot themselves in the foot because they sold a whole bunch of $1 calls at the money last week. So because of that, retail is now holding a bunch of deep in the money calls, which are now even further in the money because of where we closed on Friday at $1.40, or it went to 140 in aftermarket. But point is, those $1 strike calls are very deep in the money, and now between this coming Friday and Friday, April 14th, 40% of Mullen stock is at risk of going in the money. There's no way that market makers, mathematically speaking, would be able to acquire all of those shares in a single transaction. There's just not enough available unless they go to one of those organizations, those institutions that would be willing to sell their shares. And they aren't, because if our suspicions are correct, they're trying to engineer a hostile takeover of Mullen. So they don't want to give up their shares. They want to acquire the company, and they need every single share they can get so that they can eventually take full ownership of Mullen Automotive. So they're not going to help out the market maker. They might lend them shares to get a little bit of scratch on the side from the lending fees, but they're not going to sell their shares. So the market maker is now in a massive net short position where for every cent that Mullen rises above $1, they're going to be taking roughly a $250,000 loss, which I don't know. I'm not going to try to do the math in my head right now. But they're operating at a huge loss right now, and every cent that we rise further is just putting them further and further underwater. So now the table has completely turned on the market maker. Now they're looking at that 250 strike like, oh God, what have we done?
Okay.
And the OI on those 250 strikes for this coming Friday is extremely dangerous for them, and retail is just buying more. So yeah, this is a really bad situation for the market maker. Um, yeah, I'm really looking forward to seeing what happens now. That Friday close was everything, man. That push above 125 was all I was looking for, but to see it go to 140 after hours, they'll probably try to push it down in pre-market tomorrow. That's just my guess, but I don't think they'll be able to drop it below that $1.20 support. I just don't see it happening. And as Verde is showing on his chart right now, we have a very clear bull flag uh, being demonstrated here, which is that's a hugely bullish signal. So I'm pretty stoked. So between these two things that we're seeing that we just showed with Occam's his his
Heat map.
the heat map, the volume heat map indicator, and the technical chart for Mullen showing multiple bullish patterns with repeated upsides ahead, the options interest and the gamma potential continuously rising every single week as more and more options are written onto the chain, and retail continuously buying. And we have proven that retail is now in control of the price of the stock. All that has to happen is retail continuously buying and not selling, and doing what apes do, just holding the stock. And the market maker is literally in a position where they're going to have to beg. They're going to have to beg at whatever price is being asked in order to cover their positions. So if uniformly retail refuses to do anything, if they refuse to sell at any price um, between here and I'm going to estimate $8 or so, just because that's where those warrants are that
Warrant.
Asus is holding. Asus is holding warrants that have an exercise price of $8.84. And those are good for the next 5 years. So
How
they
many
have
shares does
all the time in
Asus?
the world.
How many can they buy and can they cover? Was that enough to cover? Because you said what, 40%? What did we say? You said it was 40%. You thought of the outstanding.
They're only able.
Mm.
I don't know how many total it is compared to against their S3 filing. I know that they can. I know that they can provide up to. I think that the total outstanding shares on the S3 is something around 513 that are authorized but not issued.
1,000 equivalent?
No,
You said
no,
513
million.
million?
Sorry.
Okay.
Did I say thousand? I'm
That's
sorry.
No. I just don't know I didn't know what the total.
Yeah, it's 500 million. It's 500 something million. I don't have the S3 filing in front of me, but I do know it's a rather high amount. It's comparable to AMC's outstanding shares, but those haven't been issued yet. Those are just authorized. So, and the thing is that by the terms of the contract, as I understood it from the S3 filing and the warrants, the cashless warrants, Asusa is only able to exercise those at $2.5 million against the fair market value price. That is the share price that Mullen is currently trading at as of close of business the previous trading day. Um, they're only able to exercise 2.5 million of those at a time. So the higher the price of Mullen is on each day, the fewer shares they can dilute by at a time. So the more that retail buys and the more they push the price up, the less dilution that can occur at any given time. And that is good for Mullen, because if they are in a position where they can get out of some of their toxic debt and the bad financing agreements that they're currently in by selling some of their shares, then that would be ideal for them, because the sooner they can get out of this bad financing, the better. But that may not even be an issue for them if they get approved for this $450 million ABTM loan from the Department of Energy. So if that occurs, then Mullen will be flush with cash with a very low interest loan from the government, which is a guaranteed loan, and it will be subsidized under the um, advanced technologies electric vehicle manufacturer's loan program. So there's a lot of things that Mullen can take advantage of. I'm not sure that they could use that loan to cover their bad financing. I think that they can only use it for business operations. They can't use it to get out of other debt. But
Right.
that's not really going to be necessary anyway, because if they actually can spin up their manufacturing process using that ATVM loan, then they'll be able to use whatever other proceeds from their sales and marketing to cover their bad financing, and they can focus all of that income on getting out of their bad loans, which I think would be ideal for them. I'm not sure what their long-term plan is, but that's how I would be dealing with the debt if I were the person in control of the company.
Yeah. No, that makes sense. I mean, it's really just shifting money around, but yeah, it's
Mhm.
whether
Yeah.
it comes in from one source or another, but you have to differentiate, for legal purposes, but,
Absolutely.
but
Yeah.
yeah.
Could you actually show that volume shelf again, Verde? I actually did want to point that out on my screen. So this is what I was talking about with the ceiling at $2. And as a matter of fact, Verde, if you could bring that volume shelf out back to February 1st. No, I mean take the start of it all the way back to February 1st. If you go out to
Yeah, gotcha.
the daily or something. There we go.
There you go.
So this is what I was talking about with the amount of volume. Look at the volume shelf on this. Above $2, the volume is basically non-existent. So there's no ceiling here. There's no resistance above. There's no resistance above $2.50. Above $2 is when it disappears, actually. So if this thing goes above $2, then those 250s are absolutely at huge risk for going in the money. There is nothing standing between the asking price above $2. There's just
Yeah.
nothing there. They were selling this thing off ever since $15. So if you took this volume shelf even further back, then you would see that there's no shelf. There's no shelf above $2 all the way back to their IPO date.
Yeah.
Wow.
There's no shelf there. There's nothing standing in the way. It's open skies all the way back up to $15. It's
Was it
ridiculous.
5th of November or something like this?
Yeah, they IPO'd 5th of November when they reverse merged with NETE. Yeah. So look
So
at that.
what's your prognosis for the week? You think we're gonna hit it close to this week?
I'm not going to
$2?
say that we're going to hit $15 or anything like
No,
that.
not two. Two.
$2, definitely possible. Definitely
I'm not gonna hit
possible.
quickly, but I was
Yeah.
wondering if
It's just going to take retail refusing to sell and continuously buying up the float. If the price goes beyond that, if it goes beyond $8, or rather, I would say $9. Once it gets above $9, that's when the price can tank at any time, because then the cashless warrants for Azusa will be eligible to be exercised, and they can start diluting at a huge profit. Anything above $9 is a big profit for them. I don't think that they were planning for this, though, and honestly, like, that doesn't matter to us. Like, Azusa is going to do whatever Azusa is going to do, and they're going to sell their shares to whatever entity they're partnering with. I suspect that they're working in cahoots with Alt Holdings, which Todd Alt can say whatever the fuck he wants. I don't care. He's the guy. The guy's crooked. His business history is enough of a demonstration to me for me to feel confident saying that he's a crooked asshole. But that doesn't matter to me. Like, that, it really doesn't matter to me. My thinking is that market makers overleveraged themselves. They took a massive short position against Mullen because they thought the company would continuously sell off and that they were in control. And for no other reason than the fact that retail noticed that they were themselves overleveraged because they were helping to manipulate the stock down to a lower price to help these institutions get a better price and take over Mullen stock. And just like what we saw with the heat map for the volume trading in real time that Occam showed us earlier on, we can see that they were doing this consistent sell-off every single Thursday in the morning. And then all of a sudden retail stepped in, and first thing Monday morning, the day that those T plus the day that those failures to deliver would have been due, that's when retail stepped in and suddenly the market maker got absolutely whacked.
Yeah.
So it's exciting. That's all I can't say what price it's going to go to. I think it has the potential to go. I can't say it because
Really,
I can't. I
what's
actually
really funny,
can't say it. What's funny?
if you look at the fib retracement with this wedge here is having this 05 on the Fibonacci, but then you catch this one, the 236, but then moving on onto the last onto the Friday, you had a big run up to this Fibonacci. You broke it. You broke all the way to the next one, but then now you're consolidating, and then in the after hours you break again. You're consolidating, and it's just interesting to see how it bounces between the 618 and the 382 basically.
That's fascinating. Would you actually
Like,
take the beginning of that Fibonacci all the way back up to their IPO date?
1 sec.
Because I think that will tell us a story about where where this thing might see its resistances at. Because now we don't have that ceiling to think about.
This is $4.
See, now that gets me excited.
15? Was that 15 to 4?
Yeah, 392.
Sounds
Although I
about
would
right? It's about
get that one.
typically, or somewhere around there.
Yeah, 412.
It's not too far.
They have nothing until $4 on the Fibonacci's.
Yeah.
But then you look back onto the shorter time frame and you see that generally you have 2 of the Fibonacci intervals that you prefer to bounce off between. So it's either you basically have 2 one next to each other. You're volatile, you expect that.
Yeah.
But then you see this price action here. You had between 0 and 382. Then you're moving up between the next 2, and then the next 2, and so on.
Right on.
Obviously, this only takes into account the last from the run up till the 72 or whatever it was, the bottom on 4th of March. Yeah, and this bull flag, yeah, you started off the Fibonacci. You see the next one, you break it. You consolidate it just at the top. You then break. You go all the way to the top. Consolidate again. So I'll be expecting to see a move. If it goes north, then yeah, these Fibonacci's look, and it seems to be moving quite nicely with them.
That's interesting. That same pattern played out that same pattern played out in the previous moves too. If you look starting on the 7th, the first bull flag was on the 7th of March.
Yes,
Yeah,
this
first
one.
bull flag right at the fib level broke out, bull flag down back
The
to
next
the
one.
support, and then broke up through the next resistance again. And then they
Yeah.
finally stopped it after they pushed it down off of resistance 3 times in a row.
Yeah, so if this here repeats, you had on Friday 1 bull flag, second one, so you'd expect a third one, maybe north of at around 150, and then consolidate down back to like 125, 130.
Mm-hmm.
So let's see, something like this, and then consolidate there,
Right.
potentially for a slightly longer period of time.
Well, if we get a run like we did back on the 28th of February, then we'd easily break through the next 3 levels. We just need that kind of volume. The market makers over leverage themselves again, so next trading week there's going to be another batch of short exempts that are due for failure to deliver on Friday. Let's see. Let me go check. I think we'll probably have to call it quits here pretty soon. I don't want to keep everybody all night long.
I gotta eat.
Yeah.
Yeah, I have to go as well. It's getting pretty late.
Yeah. Is there anybody else that has any last notes?
Great work. I mean, this is really, I appreciate all you guys' efforts. Outcomes, Verde,
Oh yeah. Yeah, no worries, man.
education for me, and I think these tools are great. And I think ultimately retail will have some revenge when this is all said and done. A lot
Maybe.
more than market makers think.
Maybe so. Maybe so. Hopefully. All right.
Um,
Have a great week. Sarah, you too. You're one of the guys. She's still there. She's muted.
Yeah. I hope you
I mean,
guys.
one more thing about the stock. Sorry.
You're good. You're good. What's up?
So that grant or that loan is a big deal. I haven't really studied it yet, but I could see like as an example of what happened to Kodak, KODK. They also had like a grant. I think it was like I think maybe 700 or 600 million or something. And they went. Everybody knows Kodak. They're bankrupt and all that stuff. They were trading at a 50-cent level, and as soon as that grant was announced, that stock in a span of 1 to 2 days, that stock went up to $60. $60 from 50
Interesting.
cents.
I'd have to.
So I'm still studying the chart and I'm trying to compare both. If there's a similarity, but it just the idea just came to me last night. Anyway, good night.
Okay. I'll look into some comparisons between it and see if we can find some similar factors. That would be a hell of a thing to catch a run from 50 cents to $70 or $60.
This is wild,
That would
man.
be something.
But again, it sold off
Almost
the
like a sport,
third day
right?
to $20.
Well, we'll check it out. That does fascinate me. It'd be an interesting case study. All right. Well, I won't keep anybody else. Thanks so much for hanging out with us for the professionals meeting. It was really cool to see you guys.
Thank you guys for having it and helping us out.
Thank you.
Yeah, no worries.
Have a great week, everybody.
Have a good one, guys.
You too, man.
Take care.
Y'all have a good night.